Hey everyone, exciting show for you today. It is our expert series. It is Thursday, 7 a.m. Pacific, so that means we bring back Jonathon Twomley. How you doing, sir?
I'm great. How are you, Michael?
I'm doing very, very well. So it's Thursday, which kind of just feels like we have to talk about the unemployment number, and it's been a week since we spoke, so we can talk about the surprising number last Friday. We can talk about the 1.5 new claims today, the continuing claims of 20.9 million, down 346,000 week on week. We can also talk about what the Fed said yesterday about unemployment heading into the year and still being pretty high into next year. So lots of stuff to talk about unemployment. Where do you want to go first?
Well, why don't we start with last week? We'll do
Okay.
it like in chronological order.
Mm-hmm.
Yeah. So we had unexpected job growth
Yep.
last week, but a lot of people, I think. So just to like set the context, I think it was like 2.7 million unexpected jobs that were added to the economy, and the unemployment rate went down, right,
Yep.
a little bit.
Yeah.
So. So everybody thought, well, this is great news, and um, you know we're heading in the right direction.
Mm-hmm.
The problem was that almost nobody noticed that the number was revised later on the same day, and basically the revision was, whoops, we made a mistake. That's not true, but that hasn't actually filtered into the press yet because everybody's still talking about this $2.7 million jobs that were added. So the unemployment rate, and I think we'll probably see this in the next revision when the numbers come out next month. It'll go back and the numbers will be corrected in the report. But even if the job number is true, I mean, let's just assume that it is true. The while it's good news, you kind of have to take it in context. Like, people were celebrating a 13.7 unemployment rate, which is higher by like 2 to 3 percentage points higher than the worst of the Great Recession, right? So you kind of got to keep it in context, right? I mean, if we had 2.7 new jobs added every month, it would be great. We'd get unemployment back down to a reasonable number within a few months, but that's I don't think it's likely to happen.
Mm-hmm.
And we just have to remember too that just things are I mean, things are bad out there because of all the
Yeah.
lockdowns, and so everyone wants to look for green shoots, which is reasonable,
Yeah.
but I think you need to keep it in context, right? So,
Yeah. When
and
I
the
thought
context
about
is unemployment rate is still really high.
Yeah, when I thought about last week, we've had a week. I actually spent hours on it over the weekend because there's lots of people arguing about the number and the math and all of that stuff, which I
Yeah.
won't get into because for me it's the trend, right? I'm always any data, any statistic, economic statistic is a single data point, and I'm looking for trends and inflection points. And
Mm-hmm.
Friday, without a doubt, was better than expected, right? So now it's
Right.
like, okay, why is it better than expected? Well, very likely it's better than expected because 30 or 35% of the states opened up at some form last month.
Right.
Okay, that's good. Didn't see that coming. Plus, PPP loans were constructed, now they've been changed slightly, where you had to spend most of that money in an 8-week period, which was last
Right.
month. Probably some there. So again, there is some grayness in the numbers, but again, I think the trend changed. Which is good. It's still ridiculously high, 13.7. The Great Recession peak was 9.9. So it's almost 50% higher, folks. I mean, that's a big percentage. But I think there's a good chance that the June report that comes out early July actually is 5, 6, 7 million additions, because if the trend is true, we should have all 50 states open by then, which are the big
Yeah.
boys, New York, California, Illinois. But again, I think there's a structural problem that people are missing, right? Yes, we go down, whatever it is, 20 million people. We come back up. We still got 12 left, right? Or whatever the number is. I think there's a
Yeah.
structural problem people are missing.
I think now I've been calling this, and some people got really angry at me when I said this, but I've been calling this the like the head fake, like the market head fake.
Okay.
And I think a lot of people are going to get, especially in the real estate business where people tend to be optimistic and tend to focus on the good news. I think a lot of people are going to get head faked by this because what is going to happen? I think we talked about this last week. You are going to see the greatest recovery in the history of mankind over the next couple of months. And
statistically speaking,
statistically speaking, right? Just because you shut everything down and then you reopen it, like that's what's going to happen, right? It's just you're going to have this really sharp V-shaped recovery. And a lot of people are going to take who can't be bothered to think very deeply about these issues.
Yeah.
Are going to look at that. And of course, like the politicians are going to demagogue the hell out of this too.
Oh yeah.
Right. Because it's an election. Yeah.
I
mean, everybody's going to claim credit for this, right? This isn't going to be just Trump or just the Democrats, because everybody had a hand in handing all the cash out.
Mm-hmm.
And so they're all going to take credit for it. And it's going to be interesting to kind of like see how the finger pointing kind of works. So like everybody taking credit for what's good, but then trying to blame each other for what's bad at the same time. It's going to be wonderful to watch this. But but nevertheless, on the investment side of things, there will be a lot of investors who are by nature optimistic and crowd following also, and will also look at like the headlines and not really dig into the numbers very much, who are going to say, look at this is, sharp rebound, V-shaped economy. It's going back to where it was a couple of months ago. Yeah. And I better buy now. And of course that may reflect itself in some price increases and stuff too, which will then reinforce the feedback loop, right? Of people saying, look, it's great. Look how prices are rising. And therefore it must be great. So buy more. And what's going to happen though, is that we're going to hit a point, which a lot of people are now saying is like September or so, where this kind of grinds to a halt, because all the people who can go back to work will have gone back to work, and will be left with a very high unemployment rate of all the people who can't go back to work.
Yeah.
And those people are going to be, on the one hand, there's going to be, say, all of the restaurants and all that kind of stuff, where people are going out that are being forced to operate at reduced capacity. They don't need their full staff back. So they're going to be those people who are going to become, you're going to fall into like the permanent unemployed bucket, or they're going to come back to work much more slowly, because I think states are going to be a little cautious about, when do we raise it? Now we're at 50% capacity. When is it safe to go to 75%, percent capacity? When is it safe to go back to normal? If a new wave of COVID hits in September, as a lot of people are predicting, all bets are off, right? So that's one bucket. Second bucket is there are businesses that existed in January that no longer exist today.
No question.
Right? And those people are not going back to work, and those people are going to have a very difficult time finding new jobs because of everything else, right? So and that even relates to today's number of new unemployment claims. This is now June 11th, right? So the lockdown started in March 16th, I think is like when New York went into lockdown. So we're going into the third month, right? So, I mean, we're almost 3 months completed in this thing. I've been reading some analysis that new claims that are being filed now, especially as economies are opening up again, right? These are permanent unemployment claims. So these are not people who were temporarily laid off because of lockdowns.
Right.
These are people who their employers no longer exist, or they've been restructured permanently.
Yeah.
So 1.5 million of those, assuming that even, let's say, it's 1.5 million new claims. Let's say 1/3 of them are permanent, right?
Okay.
Just 1/3 of them. That the previous record for unemployment claims in a week was 600,000.
Correct.
That would make 500,000 permanent claims right there. So I mean, everyone's lost all perspective because the claims have been so huge.
Yeah.
But just think about it in that context. If just a third of those new claims are permanent, then we're near record territory as it is. Or just a fifth. Let's say it's a fifth of them. It's 300,000 claims. That's like recession kind of, numbers, right?
Yeah.
So before people get too excited about the economy, I think you need to kind of put the numbers in context and think about what's going on. And what I keep on telling people, and I'm hearing this also from, from some very sophisticated investors that I talk to, everyone's saying, when's the time to buy? When's the time to buy? Are you buying now? And the answer is no, because I don't know what's going on yet. Right? I can't create a baseline yet. So, now if someone comes to me and says, here's a distressed deal that you can buy for 50 cents on the dollar, then you say, okay, well, maybe that's something, there's enough safety built into that, that I can do that. But if they're coming to you with like a regular stabilized property, with 95% occupancy, and they're saying, hey, I know I can't get full price, but I'm willing to take a 10% discount over January prices, which just basically puts us back into essentially 1919 prices, right? It's not really much of a discount if you think about it, which were already inflated in my view. Like, I'm not doing that deal because what I'm looking at is like, yeah, the numbers look really good right now, but I don't want to pay for those good numbers, because well, maybe they will hold up, but I just don't know. I don't have any confidence in saying yes, they're going to hold up. That's the problem. I can't with confidence predict that they're going to hold up. And I think with one thing we haven't reached yet, but if you look at so the rent collections have continued to be strong through this month. They're actually even up a little bit this month over last month. But again, those are what's getting reported is the A and B properties that are institutional. There's no reporting on the mom and pop deals, right? But I'm not hearing anything anecdotally. Nobody's coming to me and saying, hey, I'm only collecting 50% of my rents. Everyone seems to be doing okay from what I'm hearing, but it's because of all that money, right? It's people who are making more money because of unemployment, people who are, so it's really weird what's going on. Again, like you said, there's that PPP money too. So a lot of that money has been kind of pushed through the system by employers, right? Who have to spend it. And then, so there's a lot of money like in the economy right now, and that's holding things together. But remember, folks, that special unemployment bonus of $600 a week, which dwarfs like what you collect, unemployment wise in a lot of cases. Right?
Sure.
That runs out at the end of next month, and there are now some like pretty strong signals coming out of the White House and the Senate that like there's going to be some other stimulus bill, but it's not going to include this generous bump up, because there's a lot of people who just really feel that this is wrong. They think it's a disincentive to go back to work. So even if it survives, I just have a really hard time believing it's going to survive at that same level. Like it's going to get cut at least in half, I think. And at least. And so starting in August, that goes away. Right. And then you get into that September, thing where a lot of analysts are saying, come September, this is where we're really going to start to understand what's really going on. And I think that's when you're going to see the permanent unemployment continuing to be high. And look, there's nobody serious out there. I haven't read anybody out there saying, oh yeah, at the end of the year, unemployment's going to be 5% again. I mean, they're saying 10%, right? So then the issue becomes, okay, for that 10% of unemployed people, how many of them are getting enhanced unemployment benefits? Right. And the chances are there's a non-zero chance that none of them will be getting the enhanced benefits at the end of the year. And so you're already seeing now, and I think if people are thinking about this, consumer spending is down, savings are up because people are they're anxious. That's what happens. They save money when they don't know what's going on. If people are looking at the end of, this benefit, they may be just really stockpiling money, sticking it, in the bank to hang on to it. Now, maybe that will help them pay rent a few more months down the road, but it impacts other consumer spending, right? I mean, if people are not spending money, then that it's not like that doesn't register in unemployment, right?
Mm-hmm.
So I just don't think there's any way that you look at what's going on and say, oh, the future is rosy. I mean, I think, the recovery, the projections I've seen range from like we're back to full employment in 2022 to like 2025.
Yeah.
Some people are saying. So the idea that like you're going to run out and buy property now based on this V-shaped recovery that you're going to see, I'm telling you, you're going to see this, right? So, and they're going to, it's going to be, it's the greatest recovery in the history of mankind. Believe me, you're going to hear that phrase.
Yeah.
Right. You're going to hear politicians say, this is the greatest recovery in history, the fastest recovery in history. And it's all because of me,
yeah,
right? That's what they're all going to be saying. And don't get head faked because it's a big head fake. I mean, if you buy on that news, it's a head fake.
Yeah.
So
I think there's a couple of things in your talk there that I want to get back to. First, I totally agree that most of the unemployment claims that are happening now are structurally permanent, right? The first 4 weeks, that huge spike to 6 million, a lot of that was the furlough, shutdown, come back later, right? So a lot of that was forced by what we were doing to the economy. So I think the new ones here are structurally, the business is shut down. The other thing that nobody is talking about is, at least I'm hearing anecdotally, that the jobs that are now filing for unemployment are higher income.
Yeah.
Right. And those folks aren't making up, the extra Fed kicker is not replacing income. That's the other thing that people are missing. We're now starting to see the second order of unemployment kick in, and we're seeing it in tech industry, which nobody is talking about yet. The tech industry is just starting to hear it. You're seeing it in marketing and in sales and these other areas. And that's going to have an impact. And, if you have 10% unemployment heading into the end of the year, that's not going to be a good sign for real estate. The other thing is, I just want to do the math one more time for people, right? I saw somewhere that GDP is expected to be down 50% in Q2. It'll supposedly be up 30% in Q3 and 20% in Q4. Some people look at that and go, oh my God, we're back. No, folks, let's do the math on 100. You go from 100 to 50, then you go from 50 to 65, and then you go from 65 to 78. That's how 50, 30, 20 go. You go all the way down from 100 to 78. So are we back? No, we're still 22% below the numbers. So that's horrible.
Yeah. If you drop by 50, you have to go back up by 100% to be back where you were. So again, I think so people, what Michael, you and I are both saying to people is like, hey, we're not trying to spread bad news.
No.
What we're trying to say is, don't get fooled by what looks like good news, right? And the thing to remember is that, look, the opportunity is going to be there, right? Just it's not there now, because now we just don't know what the situation is. But don't get head faked into thinking that, because it's back by 50%, it's going all the way back up fast, and you better jump into the market now, or you're going to miss it. Like what's more likely to happen is, this is what's, in the stock market is sometimes known as, a bull trap, right?
Yeah.
Where the market bottoms, it appears to bottom, and it goes up, and all the bulls rush back in, and then it collapses again, and they're all wiped out. That's a bull trap, and this is what is likely to happen with housing with real estate prices. That there will be people jumping in because they think that they've got to get in early, right? Yeah. But they're actually late. They're late on the last cycle, right? Yeah. And they're not, and they're too early on the next one. And but don't, I know it's hard to be patient sometimes, and believe me, as somebody who's been on the sidelines for a long time and just watched this thing go up and up and up without being untethered to reality, and wondering when reality was going to hit and feeling like, gosh, maybe it's never going to hit. Patience is not easy, but it is rewarded, right? So be patient a little while longer, and you will be rewarded, because I think that the opportunities are really going to come at the end of the year, in the beginning of 2021. And there's definitely going to be some buying opportunities there.
Yeah, it's interesting. Something I've been telling people just since Friday is, again, I'm always looking for the next domino. So again, I think Friday's an inflection point. It was net good news, net positive in the residential side. So not commercial, right? The residential side. What I'm telling people to watch for is, do listings rise, right? Do people that were thinking about selling and then took it off because they didn't want anybody going through their house, do we see listings spike, right? Because that's going to tell you, are people feeling good, right? Because right now, nationally, we're about 1.05 million, where we should be at 1.35. So we're about 30% below. I'm guessing in the next 30 days, we are going to see a spike in listings. Then the question becomes, okay, great. We know demand today exceeds supply, but does supply exceed to a point where it outpaces demand? That's what we need to be watching on the residential side. I do believe if you're a seller and you list early, your house is going to sell like that. There's just so much demand out there. But if you list late meaning July, you could be listing into an environment of too many choices. So that's what I'm watching on the residential side. It's going to be interesting if listings spike here in the next 2 to 3 weeks.
Yeah, that will be interesting. And how do you track that?
I have different real estate agents. Usually it's NAR, National Association of Realtors, post it. But I have a couple of brokers that are pulling the data for me, both locally and nationally. Yeah, so it'll be fun. It'll be fun to watch. The other thing I think we should talk about, what's going on, is the stock market, right? I get so many questions about that. And it's funny. I don't know if you saw this. I actually did a video on it after hours on Tuesday, I think it was. Today's Thursday. There was this arrogant little prick who basically has been day trading stocks, came out and said he's the next Warren Buffett. He actually said, or was quoted as saying, sellers are losers. I'm like, what? And why would I sell an airline if they go up 20% every day? I'm like, you are nothing but a freaking gambler. And, one of these days the market's going to turn on you. You're going to get some margin calls and you're going to be non-existent. I mean, this arrogance I see out there in trading penny stocks, and Hertz going from 72 cents to $5 when it's going to be delisted. I mean, it's nonsense.
Yeah. I mean, it's the stock market right now is really untethered from any kind of reality, and it's just trading on sentiment, and the good news kind of drives it. What I think is really going on is, so Mark Cuban there was something, he got interviewed yesterday, and one of the things he said was, part of this is being driven by people who are stuck at home with nothing to do, and they can't bet on sports anymore.
Oh my God.
Sports. And so they're betting on the stock market, and they're doing it on margin, right? Because they have no skin in the game. They're allowed to borrow the money and they all think, oh boy, I can make money on free money, and it's consequence free. I think there are some other more sophisticated people who are like the professional kind of day traders, who are, who trade on where they see market sentiment is going. That's all they're doing. They're not really looking at sort of like underlying fundamentals. They're just looking around them and saying, okay, all I got to do is be one step ahead of that guy over there.
Yeah.
And I'm okay. And I look at the news and I think, okay, that guy over there is just going to buy on that news, so I'm going to buy ahead of him. But those people are the ones who are also thinking, okay, I'm also going to sell and take profits on this at some point when it looks to me like the market is peaking. Then I'm going to sell it all. And, and I'm going to sell it to that guy right there next to me who thinks that this is going to go up forever.
Yeah.
So I think a lot of what we're seeing is being driven by sophisticated people who know how the market's going to react to the greatest recovery in history, right? And that's what they're basing their trades on, because at the same time you've got very sophisticated hedge fund managers, value investors who are getting creamed right now because their style of trading is, let's base it on the underlying economy, on
Right.
what's really going on. And so they've taken defensive positions, they've taken short positions based on what's really happening in the economy, and they're getting their asses handed to them because of all of the people who are running on sentiment. Now, that will change at some point when the reality kicks in. If those value investors just kind of stick it out, they'll be fine in the long run. And those people who are planning to sell, those people will also be fine because this is what they're banking on. But it's those people who, like Mr. I'm the next Warren Buffett guy, right? Who is going to, especially if he's trading on margin, he's going to wind up like having to sell his house to cover his positions because he probably doesn't have anything in the bank, if he's doing this on margin. So I'm getting, probably like you, this question all the time. People are saying, well, why are you so still bearish on multifamily pricing? Look at the stock market. Isn't it the same thing? Isn't the same thing going to happen? Doesn't the stock market prove that we should all be buying multifamily right now? And the answer is
no,
absolutely not. Absolutely not. Those two things have nothing to do with one another, right? As a multifamily investor, you have to be looking at cash flows, and you have to be looking at cash flows, and you have to be able to predict that cash flow going into the future. And right now you can't do that. In stocks, now there are people who do value investors value stocks on the same basis. And those guys are all getting creamed right now because the way they're valuing those stocks is these cash flows are going to go down if they haven't started going down already. And that means that the price will go down. So I am bearish. But there are a lot of people who don't trade on that basis. They trade purely on sentiment. And they're not value investors, they're momentum investors, and they're just looking to get ahead of, like what I said, get ahead of the other guys, how they're going to react. And that's their trading. So right now the market is dominated by those kinds of players, right? It is dominated by the people who are just trading on what they think the other people around them are going to do. So, and they know that the other people around them they're not looking at any kind of fundamental analysis at all. So
the folks that are getting really excited because they've been right 3 or 4 times in a row. Anybody can get hot. Anybody can get, bet the momentum play. It happens, right? You can roll 5 times in a row, right? I mean, statistically it's possible. And again, I remember this because again, I write it in the book. We were day trading stocks when I was 30 years old and we were crushing it. I remember thinking, I'm the next Warren Buffett, right? I can't do any wrong. And then one day out of nowhere, that was all gone. Just poof, gone. And not only did I lose all of it, I lost more than I'd gained. And I know what it means to write off $3,000 a year because at the time you can only write that off. Your stock loss is $3,000 a year. So I remember.
Listen, and this is not this kind of disconnect from reality and this kind of like hubris that says I'm the greatest in the world. I mean, this affects very smart people too, right? I see people from I have a college class Facebook group was very active, and I don't usually talk about this because I don't think it's relevant, but I mean, I went to Harvard, right? So it's like, these are all a bunch of Harvard people. They're all like doctors and lawyers and, really sophisticated people. And they're all bragging, not all of them. I mean, a bunch of people are in there bragging about like how much money they're making in the stock market because, they bought airline stocks after Buffett sold all his airline stocks and like stuff like that. And they're buying into this whole, this whole like, oh, I'm so smart kind of thing.
Yeah.
Of course, they went to Harvard, so they already think that they're smart.
they
right?
already think they're here. Yeah.
That's the problem too. They already, I mean, it can be even worse for people like that because they have spent their whole entire lives being told, oh, you're so smart, you're so smart. So they think they're smart about everything, right? So they can actually be some of the dumbest investors out there. But the one person in the group who's saying essentially like sell everything as soon as you have a chance is the guy who's the most sophisticated, like the single person. This business is in stocks, right? So he's the guy who's saying, like, the pro is saying, don't get fooled by this.
Yeah.
But it's all the amateurs who are patting themselves for their on the back for their genius, who are bragging about like the money they've made so far. They haven't sold it. They haven't taken the chips off the table, right?
Well,
you only make money when you sell. You don't make money when it's in your portfolio, right? Yeah. So if they don't take the chips off, the table, it's meaningless, because if it goes back down past where they bought, like,
and it could get there quick.
And believe me, they won't be like coming into the Facebook group going, "Hey guys, remember when I said how smart I was because I made all that money on this stock? Well, now it's trading 50% below where I bought it at, and I'm just going to apologize for that." I mean, you won't see that post ever, right?
Yeah, no, you won't see it. I'm actually going to check and see what they're doing, because they were down 15 or 20% before I started this. Let's see what they're.
Oh, really?
Yeah, let's see what American Airlines is at. I think it's AA, right?
Yeah, I think so.
Let's see. Oh no, it's Alcoa. It's down only 10% now. Airlines. Yeah. They're people who buy, again, you can buy a lotto ticket. A lot of people are buying lotto tickets, but you don't make money until you sell. That one quote of that idiot, only losers sell, you're going to go bankrupt, buddy. I mean, that's just dumb.
Yeah. You have to, I mean, it just, you just come back to the Warren Buffett quote, like, basically sell when others are buying and buy when others are selling. Like, that's how you make money. You don't make money by
staying in. You don't make
by
money
staying in forever.
Yeah.
Unless you bought at a really low valuation and you really believe that the stock is a long-term hold and it doesn't change. But I have one of my best friends is a very, very successful value investor, and they're constantly reevaluating every stock they own all the time to determine whether it is worth holding or not. Wow. Right. And it's not like they buy it once and then like, that's it.
Just tuck it away. Yeah.
And I know that there are people who believe that you should never sell real estate. And that's a little different, but that, again, too, it really matters when you buy, right? It matters how, the market will correct your mistakes to a certain extent if you hold it long enough, right? And you don't have to refinance it. This maybe for like single family houses, if you've got a 30-year mortgage and you don't have to worry about a balloon payment for a very long time, you can ride that out. For commercial property where you're looking at terms of 5 to 10 years and a balloon payment you have to refinance, like, you have to think about where in the cycle you have to refinance. And so there's less room for the market to correct your mistake, but the market is, the cheaper you buy it at, the more room there is for the market to correct your errors, right? So if you're buying it at the top, or we can't even talk about the top anymore. We're past the top. The top has happened, right? But if you buy it too early in the descent, right, then you may not have enough time to get back up to where to what you paid for it when you have to refinance,
right?
Or like the rents, rents are declining. I don't know if you've picked this up, but we've actually had, people 6 months ago, people were telling me rents will go up forever because of, nobody wants to own a home anymore, which isn't true. Millennials they don't want to rent, they don't want to buy because they don't want to be stuck in an area, isn't true. There isn't enough housing being built, so rents are going to go up forever, isn't true. Now we've got actual rent decline, right? It actually happened.
Substantial.
Yeah, $13, right? $13 rent decline. That's a lot, right? Across a whole building. Yeah. That could be, a couple thousand a month. That, then and tens of thousands a year. That's that's a big hit to your NOI, right? So it just don't believe anybody who makes, any kind of, you know, extremist statement like never do this, never do that, always do this, always do that. Those kinds of, in investing, those are the kinds of things that get you in trouble.
Yeah. Again, the reason we were able to retire financially free is because we sold when other people wanted to pay stupid prices. We sold houses in 2006 and we sold apartments in 2019. The market tells you what's going on. And when you see people rush in and just because, and this and that, and, debt is cheap and equity's cheaper. I mean, God, I still can't believe some of the prices we got for our C-class apartments in 2019. It's pretty crazy.
Yeah. And I still see this argument all the time. Like, just because there's a lot of money out there means that prices won't fall. And again, I think the people who have been on the sidelines waiting for bargains are not in the business of like throwing money down the drain, right? Like if they're that cautious that they've been on the sidelines all this time while everybody else has been buying like crazy, or they are that, that interested in buying at the bottom, like that's what they really, really want to do. They're going to wait till they believe the bottom is in. They're not going to jump in to support the market, right?
Right.
And I think in the stock market, it's a little bit different because there are a huge number of traders, a huge proportion of traders who get in and get out, right? They're trading on short-term news, and they're in, they're out, they're in, they're out, they're in, they're out all the time. That's different. But for what, if you buy a multifamily property and you decide you want to sell, you may not find a buyer.
Oh, yeah.
Or you may not find a buyer. You may not find a buyer who wants to pay anything near what you need to sell to pay back your loan. And I saw this happen the last time around.
Me too.
I saw this happen. Stuff sat on the market for a couple of years, and you were like, well, why don't they lower their price? They couldn't lower their price.
They can't. Yeah, exactly.
Because they were already basically at like whatever their outstanding loan principal was that they had to pay back, and they couldn't go any further than that.
Yeah.
So,
it's going to be interesting because the last thing I want to go back to is that stimulus, because again, the thing that specifically the unemployment, $600, because I think that is going to be, it's actually going to become a political football because we do have an election this year. And I do not see, I know there's a bunch of Republicans, including our president, talking about not extending it. I think if he doesn't extend it, he loses the election, because I think there's so much structural unemployment that is kind of hiding in the background. You don't want to have 10, 12% unemployment heading into your November election. If you do,
this is true.
You better be paying people enough money to stay home so they feel better. That's going to be the choice he has to make. And
I agree. And well, frankly, there's no choice about the 10 or 11% unemployment, because that's going to happen. I mean, I don't see any way that we avoid that in November. And
no, I totally agree, but he needs to pay them. Yeah.
Right. So that's what I mean. So then the choice becomes,
yes,
what do you do about that? Are you going to extend the stimulus and take credit for it?
Yes.
Or are you going to take a hard line and say,
he can very easily win or lose the election on that single decision, even though all the other nonsense he does and all that stuff, that could be the thing that's the nail in the coffin.
The thing is, I could see, I don't think if you look at sort of, and you and I, like, we try to avoid politics in this, but I think I have to make this analogy because I just think it's relevant. Mm-hmm. If you see the way that Trump is kind of digging his heels in with regard to stuff like, the Army has come out and said, we think it's time to rename these bases that have been named after Confederate generals. And Trump is like, no way, right? And he's saying, no, you can't do it. Or, NASCAR came out and said, it's time to put those Confederate flags aside. And Trump said, they're wrong, right? So if you see him digging his heels in about stuff like that, where like the the primary stakeholders have already said this is what we want to do,
Right.
and he's digging in, like siding with kind of like a small minority of people on that issue.
Small and getting smaller.
Small and getting smaller. I could see the possibility of, and I don't think it, frankly, with respect to those two issues, I don't think it's in his interest to take the position that he's taking. I think
I totally agree. It's foolish.
He'd be better served going with.
Yeah, the masses are on the other side, buddy. The masses are over there.
Yeah. So I think, I think there's a disconnect.
Yeah.
Between what's in his best interest and what he's doing, and I think that you could see the same thing happen with the stimulus money, whereas if he feels like the people that he wants to please are like the business leaders and the other people who are and people who are very, very opposed to this idea of people getting paid to sit on their asses and do nothing, which is it's a substantial constituency.
Sure.
If he decides that he wants to please those people rather than sort of everybody else, I could see him digging in his heels about this. Now,
Me
I don't
too.
know.
I'm not voicing which one he does. I'm just saying it could be, again, right. I don't talk about which way I lean. I'm just like logical. Like that's going to be a vote. That will be a voting decision. Are people grouchy and upset? And the incumbent takes the brunt. I mean, he's the incumbent. I'm sorry. Right. That's just what it is.
Yeah. All I'm saying is that you would think, like, logic would dictate that in an election year with high unemployment, you'd want to be throwing money at people like crazy and taking credit for it, right? That would seem to be like the position that most people would take. So, but I'm just saying, like, I think that it is possible that will not happen.
Oh,
like,
yeah.
That's all I'm saying. Yeah,
no, I agree with you.
Like, it's on. Yeah,
I agree with you.
It's on a slam dunk that this one.
Yeah. So, no, I think, but no, I totally agree. And I get the arguments, but again, if I'm playing the political chessboard, do I want 20 million people? Now you can always say those 20 million people won't vote. Okay, fine. Right. Because just because you're here doesn't mean you vote. I mean, there's just so much stuff that's going to be in our face until November. It's interesting.
And I think that all of this, frankly, just makes the investing environment more confused and difficult to read, right? So, it means that we don't really have any kind of like clear direction,
no certainty,
and no certainty, and it's not, like, uncertainty is great for stock traders. Like, they love volatility. That's where you make money, right? Mm-hmm. When things are going up and down and up and down, if you've got the people who can read things, the direction well, then they can just make a ton of money on that up and down stuff. In real estate, it just doesn't move that fast, and you've got to be able to get more certainty into the directionality of the economy, and right now we can't. And the political situation makes it also difficult to read, right? So, and then look, if Biden gets elected, let's just take this out another step. If Biden gets elected, I mean, we know what happens when, not talking about the underlying economy, put that aside, but when Democrats get elected, Wall Street has a little freak out for a couple months,
no doubt,
right? And so they're going to sell, right? Yeah. So the stock market's going to go down if Biden's elected, and before everyone kind of recovers from their freak out and they just go back to business as usual, right? But there will be a freak out, and that'll make things look bad too. So sort of like, no matter what happens, we're in this situation now with all the uncertainty around the election and all the uncertainty around the economy, where you can't, if you're investing in assets that you can get in and get out of easily, you can limit your losses. But if you're investing in like slow moving stuff where you really have to be able to evaluate the cash flows, like real estate, then it just becomes much more difficult to understand the directionality of the economy. And that means not that you're not afraid to buy, you're just afraid, like, just don't know what's going on. It's a different mental space. Yeah. So uncertainty is different from fear. You want to be buying in the fear market, but the uncertainty market is like, that's a market where you just have to stand still and kind of wait till the direction emerges.
Yeah, just real quick on the Biden thing, right? If he was, even if like the election's in November, right? If we get to October and he's a double-digit favorite because of this or that poll or whatever nonsense is going on, Wall Street's going to freak out early. They're going to freak out fast.
Yeah.
Because it's very clear that
Yeah.
first thing he's going to do is change the tax code for businesses, which will have an impact on earnings per share. I mean, that's how stocks are valued, folks.
Yeah.
So Wall Street will freak out early. It's going to be, the next, I'm not looking to commit major capital until after the election for all kinds of reasons. First, you don't know who's going to win. Second, as we talked about early in this show, I don't think the real pain happens till September, right?
Yeah.
So there's just so many things like, whoa, okay, step back. I'm not buying any multifamily probably till 2021. I'll buy some residential because it's easier. I can get in and out, different lending. But multifamily, 20 units and above, man, I'm not touching that stuff till at least next year.
Yeah. Yeah. The single family, you can flip it,
Yep.
Your risk is lower anyway, right? You're not talking about the same amounts of money.
Mm-hmm.
It's just, there's just, you don't have escrows from the bank, you don't have all this other kind of stuff that you have to deal with multifamily. Single family, you could,
multiple
get in,
exits and
fix it up, flip it, rent it,
Yep.
so.
Yeah. Very cool. Well, thank you very much for your time. This is always fun, Jonathon. Thank you very much.
Yeah. Thank you so much, Michael.
Yep.